Silicon Valley Bank, SVB, located in Silicon Valley, is one of the top 16 banks of the USA which has recently collapsed. In this video, we will see what has led to the collapse of this big bank. The bank catered to venture capitalists and technology startups. Why did SVB fail? Since the pandemic began, Silicon Valley Bank had been buying lots of what are often considered safe assets like US Treasuries and government-backed mortgage bonds. But when interest rates start to rise quickly, as they did last year, their fixed interest payments don't keep up with rising rates. Those assets were no longer worth what the bank paid for them, and the bank was sitting on more than $17 billion in potential losses on those assets as of the end of last year. Why was there a run on the bank? Then last week, the bank faced a tidal wave of $42 billion of deposit withdrawal requests. It wasn't able to raise the cash it needed to cover the outflows, which prompted regulators to step in and close the bank. Because these were corporate deposits, they were often larger than the Federal Deposit Insurance Corporation's $250,000 insurance limit. SVB had over $150 billion in uninsured deposits as of the end of last year. What happened to those uninsured deposits? The FDIC on Friday said that insured depositors of SVB would have access to their money no later than Monday morning. Initially, it said that uninsured depositors would receive a dividend, and then receivership certificates for the remaining balances that could be paid out over time, meaning repayment wasn't certain. The bank's shareholders and unsecured bondholders, meaning those creditors to the bank who didn't have explicit collateral backing their debts, weren't given any support by regulators. Could SVB have sat on paper losses until rates decline? What happens to SVB employees? Can SVB recover? Senior managers, including the CEO, Greg Becker, were removed. For now, many other employees are being asked by regulators to do their same jobs as the bank is unwound by regulators. Could SVB's collapse cause a recession? The guarantee of the unsecured deposits may help to contain immediate fallout, like companies that had money at SVB and Signature not being able to make payroll. But if other banks are worried about their deposits or capital, it could constrain lending that would tie up their resources. A big question is whether the events change the Federal Reserve's pace of interest rate increases.